right, so I'm going to share my screen with everyone here. I'm going to go through, like Josh had mentioned, he just did the price movers. So I'm actually going to go through the price non-movers. So yeah, thanks Josh for the introduction. I appreciate it. Yeah, I'm Shawn. I'm a trading strategist with Delphian. So you had seen my credentials and my experience before, traded commodities and stocks and options for a while. So I have some decent experience in the markets, and I apply a lot of that knowledge here to Delphian and use Delphian to back test, a lot of the strategies and theories that I have experience with. So like Josh had mentioned, I do like the earnings data that we have, and I find it very useful within all of these different categories that we're showing today, some more so than others, but I think we can still optimize some of the other ones as well and come up with some great strategies and great trades. So like Josh had mentioned, the price movers, you're really looking for a movement in the stock, around earnings before and typically through earnings, and then price non-movers essentially is just the opposite of that. So you'll see with some of these strategies, they're talking about one way, and then the other strategy is typically just almost exactly the opposite. With the price non-movers, we're just looking for stocks that just don't have that much movement in price around earnings. So when you're doing that, as you could surmise, a non-mover, you're not going to be able to typically do a long type strategy. You're going to be looking at some of the short strategies or strategies where you're, selling the options, collecting a credit, and then buying the options back later for hopefully at a cheaper price. So the price non-mover, as it says on the screen, really you're looking at some of the companies that their earnings reports consistently produce small stock price changes after the earnings announcement. So you'll see historically that the movement of the stock price will fall below or well below what the market makers are anticipating, and therefore that's where you're going to find some of your trading opportunities. It's a price non-mover, and typically, as I said before, the movement happens at earnings or the day after earnings, and you can kind of see that throughout the chart that we're going to look at in a second. The strategy, again, similar to the other ones, we're looking to capture 15 to 30% profit on the short straddle. As Josh had mentioned, you can also put in the short strangles there as well. Really, your risk profile is going to be a big one based on which strategy you're going to use there. But I always recommend to test the different strategies out based on the risk and test the strategies out based on the profit potential. And that's where you'll be able to optimize and hopefully find the better trades based on that particular strategy. These trades for the non-movers are going to be closed when any of these particular conditions are met. So our profit target is met, our stop loss is going to be met, or the day after the earnings release. So, our stop loss on these price non-movers is pretty critical, because when you're selling a straddle or selling a strangle, you really don't have any protection on that trade. So you always want to have a stop loss or at least some type of plan in place before putting a trade like this on. So this is probably one of the, I would say you want to have some decent trading experience when you're doing a trade like this. But this is one also that would be great to test out within our virtual portfolio first to get some ideas of how the stocks are moving, how the options are moving, what type of profit can you get out of it, and also to see what type of trouble can you potentially get in if you're wrong, or if actually Delphian is incorrect on the movement of that particular stock. So always put that in there and have a plan in place. With this strategy, we're using the short straddle for this example as the primary strategy, but like I mentioned before, you can use short strangles. You can test iron condors and iron butterflies out as well. The iron condors and iron butterflies are great strategies to look at, because those take advantage of the short straddle and the short strangle theory, but you're also using options that are further out of the money on the call side and on the put side to help kind of reduce your risk and basically keep it almost as a risk-defined type trade. The short straddle, again, is designed to profit on the lack of movement in the stock immediately after the earnings. Again, unlimited risk exposure, which we talked about before. We talked about the iron condors and the iron butterflies as well. Again, long strategies are not as viable with the price non-mover, because you're really looking to, basically collect, premium out of the stock that's not going to move. So those long strategies are going to be somewhat difficult. Short call spreads, which are also bear call spreads, and short put spreads, which are also bull put spreads, are potential trades if back tested under the appropriate conditions. So depending on if you have a if you have a bias to the particular one side of the market or other based on the particular stock and coming into earnings, you can always test out different strategies like a short call spread or a short put spread to see if that strategy might be more optimal than some of the other ones that we are using. Here's the trading strategy like Josh had shown earlier using a screenshot from Delphian. So the short straddle that we're using here, you can see with this price non-mover, I'm entering into the trade on the day of earnings, so 0 days before earnings is my entry, and I am exiting 1 day after earnings. I have the profit target set at 30% of my max profit, so 30% of my max profit will be 30% of the credit that I actually receive when I initiate the trade. I use a stop loss of 200% in this scenario, so 200% of my max profit. So in theory, if I collect $500 as a credit is the most that I can make on the trade, so my stop loss will be set at $1,000, so 200% of my credit that I receive. I'm using 30 days to expire on the options. And I'm using weekly options. The reason that we're using weekly options for this trading strategy, in my mind, is the trading strategy is a very short-term, 2-day at most trading strategy. So, you're really getting in and getting out fairly quickly. So if I can use some of those weekly options and find the best strategy there, that's going to help, I think, increase that profit a little bit more. Monthly options can be tested, but I'm using weeklies for these. And we're basically selling, excuse me 1 second, we're selling the at-the-money call and the at-the-money put. So again, we're selling a delta 48 on the call side, and if a 48 is not available, as Josh had mentioned, it just kind of creeps up from there, 49.50, until the system finds an option to backtest for us. Give me 1 second. So on the next page, my screen is running for some reason. So on the next page is showing how we find the good candidates. This is a main portion of our screener section that we have that we use on a daily basis. So this is what some of the screeners look like within Delphian. So for the non-movers, we're looking at stocks that have a closing price 1 day after in either direction less than 5%, and we're looking at 7 out of 10 earnings. So what I'm looking at here is I'm looking for a stock that typically does not move or moves less than 5% in either direction, 7 out of the 10 earnings. And again, all of this information that we set out is what we find as a good strategy, but optimization of these and optimization of these screeners, I think, is key for you finding strategies that are going to, meet your goals and meet what you want to find within the system. Here's a chart for Microsoft. So like Josh's presentation, I have 2 stocks that I'm going to go over that meet this particular criteria. Microsoft is one of them for the price non-mover. So you can see I have the earnings listed here as well. So earnings comes out. You can see how the stock barely moves the day or two after earnings for this trade back in October. And then it does have a spike up, but we will be out typically before that spike up happens. Similar to here, earnings happens, it spikes up, then the stock moves sideways. Same here, earnings happens, stock sells off, pretty much moves sideways to up a little bit. And you kind of see here a little bit, so earnings happened and the stock sold off. So this one might be our loser within this category, but we'll see on the next page. So you can see trade 10, which is basically this trade right here. We can see trade 10 actually lost us $102 on that strategy. But as you can see with the entry and the exits, we're getting in 722, we're getting out on 723, we're getting in on 429, getting out the next day at 430. So you can see the credit that we receive plus the profit that we're making with that particular move, or the profit that we're making or the loss that we're making no matter what, because we're getting out at the end of the day on the next day. Here's your graph. We're talking about a win percentage of 90%, profit factor of 14.41, and a total profit overall of 1368. The next one's Disney. Disney is a similar setup we're talking. So you can see the E kind of covers up the next day, but we can see this earnings comes out, stock somewhat moves sideways. Earnings comes out, stock sold off but went sideways. So you can see just within this graph, last earnings here, stock rallied up, and then you can see it actually kept going up a little bit. So that would be showing me that's probably a loser on that one as well. So you can see there's 2 losers within this category that we were looking at. So that one, which is trade 10, which again is this section here. And then, you know, you can see just all the different values based on doing the long straddle. Here's our, you know, our win percentage, 80% for Disney using this strategy, 4.66 profit factor with a profit of over $1,000. And then similar to what Josh had earlier, there's not a huge amount of candidates on the non-mover list. I mean, you're really looking for a small group of stocks that, you know, move less than 5% in either direction after earnings. So you can see 33 potential trades for the Q3 project. We're talking about that are over a 60% win rate, 20 potential trades over 70%, 11 over 80%, and 2 that are over 90%. So not a big sample size there, but I really think some of these trades, you don't need a huge sample size. Find some of the great trades within that particular section, test them yourself, and if you want to try to optimize them. But you know, we're giving you a great sample size to choose from with a lot of stocks to be able to go in there and test. Like Josh mentioned, you know, we're going to use it to track upcoming dates, but make sure you're looking at that secondary source to verify those earnings announcements. You know, somebody had asked a question earlier. I use Morningstar and I use Thinkorswim, so I have a couple different sources that I try to match up the earnings dates with what Delphian has that we've received from Zacks. But sometimes things come up and they have been changing lately. Facebook was one recently, I think a couple weeks back or a month back, where they had to go speak in front of Congress. So their earnings was scheduled for Wednesday, but then on Tuesday, since that Congress meeting had come up, they changed their earnings date either on that Monday or Tuesday for the Wednesday earnings, and they pushed it to Thursday. So there was only a couple days leadway with that one, and since when they changed their earnings date. I don't think that's fairly standard, but it can happen. And so you always want to be careful and just make sure you're verifying those earnings dates before we're placing a trade, especially if the trade's based on earnings. Executing the trade for this, Josh had mentioned it earlier as well. So enter the trade, prior to the earnings announcement. Just make sure you're looking out for before market open or after the market closes. With these straddles, short straddles especially, I'm always going to use limit orders. Obviously, if I'm using a short straddle or a short strangle or any short option by itself, I always want to make sure I'm understanding my potential risk. Because again, if you're selling calls, your risk in theory is unlimited to the upside. Selling puts, the stock can only drop to zero, but still, depending on the price of the stock, that risk could be substantial. So always have an understanding of what the risk is. I always like to harp on the fact that I always want to have a trading plan prior to entering a trade, whether that be me using a virtual portfolio or me writing it down on a piece of paper. But I always want to know, if I get in for this particular price, what am I going to do then? And then if the trade goes in my favor, where am I getting out? If the trade goes against me, what am I going to do? Am I going to roll it? Am I just going to close the trade? If I do roll it, does that add more risk? And if it does, then what? So I always want to have a plan ahead of time, because I've seen it many times in the past where if I get into a short trade or other traders have entered into short trades and they don't have a plan, then when something bad does happen, they're really at a loss of what to do to kind of how to manage out of it. So, have that plan ahead of time. It's very important. Once the trade is entered, put the limit order in, get it set to close at the 30% profit of your max profit or the credit received, and then just have that order in there GTC. And then make sure, if you don't get filled on your profit, exit the trade prior to the close the day after the earnings release. So make sure you're out prior to the close if that profit isn't hit or your stop loss isn't hit either. There's not many other notes I had on that one. I just want to make sure, that we know I'm looking at weekly options on there. The profit's obviously going to be based on the credit that we receive. The screener is customizable, so I used 5% on this one. You could tighten that up and say I only want a stock that moves 3%. Obviously, your sample list is probably going to get smaller than my list that I have, or you can make that wider, and then your list could potentially get a little bit bigger. So always have that as an option that you can make those changes as well. That's it for that. For the non-movers, does anybody have any questions on the non-movers before I move over to the vol crush? See, there were some chats coming in and some other things coming in as well.
Yeah, taking care of them.
Okay, perfect. All right, good deal. So yeah, I'll move over to the vol crush. And again, feel free to put questions in the chat or set some to the side and we'll answer them at the end of the call.
Hey,
Also, go ahead.
Shawn, can you go through do you have the share drive? You can go through those real quick. Just kind of.
I think I do. Give me 1 second. I think I saved it. So our share drive and the vol crush. So we're looking at, or not the vol crush, excuse me, the non-movers. So all of these are pretty set up, set up the similar way Josh and I worked on these together and tried to put them in the Excel and push them over to the shared drive so everybody can view them. Obviously, if you have any questions or anything that's needed on how these different files work, you can contact myself or Josh. And that's what I was going to mention earlier too. We'll have our email up later. Feel free to contact him, contact me for any additional questions above and beyond what we're covering here. It shouldn't take this long to pull up. Let's see. Yours was pretty fast, Josh. Not sure why it's taking a while.
I don't know. Do you have the file, right? You can just.
Yeah, I do have the file. I have tons of them, so that's why I don't want to open that up because I got a lot of them sitting there. Let's see. Give me 1 second. Trying to find them here. Give me 1 second. I'm trying to pull up the other file. So the non-movers. So here's some of the non-movers that I looked at. This is how Josh kind of set his up, and I set mine up in a similar way as well, using the short straddle. We were talking about that. We can test it using the short strangle as well if you wanted to do so. I ran mine with a different little bit of scenarios. So I was looking at a win rate of 60% with a positive profit factor, and I used a bid-ask spread on some of mine as well. So basically what I used is I wanted to find options that were fairly liquid. And by doing that, I was able to put in there in the screener within Delphian to use the option spread. So I want my option spread, the difference between the bid-ask spread on the particular option has to be less than 1%. So we can see based on that, here's my list of about 33 stocks that I was looking at for the non-mover candidates. You can see some of these like Microsoft earnings coming out on 10/28. We can see that it has a 90% win rate, 14.41 profit factor. I think I showed this on the slide before, but we can see some other great symbols in here as well. I mean, we're looking at NVIDIA, Verizon, like Josh had mentioned, Google, Starbucks. So, Google's, like Josh had mentioned as well before, I mean, Google's a fairly expensive stock. So if you're selling a straddle or selling a strangle on that particular stock, you're going to get a decent amount of credit for doing so, but you got to want to make sure that risk is within line of what you want to trade also. So I ran through some of these that way with a 0 to 1% bid-ask spread. I widened my bid-ask spread a little bit to do 2%, and you can see the stock list went up from about 33 to 68. So as I'm able to get a wider bid-ask spread, I'm able to pull in more options or more candidates of different stocks. Here we're talking about CME. We're looking at some other ones, maybe I'm trying to find some that might not have been on the other list, but you can get the idea of kind of how you can run through that and use different screeners to either make the list bigger again or tighten the list up if you wanted to do so. Let's see. All right, so that's not working, so we know that it's okay. All right, so what I'll look at here is any more questions, Josh, coming in?